Hello. How are you? My name is Tracy Lenz. I'm the CEO and I'm a petroleum engineer, CEO of Pecan Tree. We're an oil and gas appraisal minerals place where we have a software called pecanestimate.com, and we offer these weekly office hours where I'm covering certain topics, answering questions. These are live right now, so if you're watching the rerun, check when our next live is if you'd like to catch it. And if you have a question, make sure to just pop it in the chat or send an email to kelly@pecantreeog.com. And so today I'm going to start with an overview of the conference that I was at last week, because I thought it would be a nice overview for people who aren't able to go to it, which is, most mineral owners aren't there, but it's the Minerals and Royalties Conference. And it was hosted in Houston, Texas at the Post Oak Hotel. And it had really good topics that it was covered. It was only a day and a half, so it wasn't a whole lot. But I thought it'd be good to hear what the industry is saying with all the changes lately and kind of my key takeaways from that. So this is a very informal video today. We are off today for Easter Monday. And so happy Easter. I hope y'all had a great Easter weekend. And so just real informal video, just covering the what's going on. So let's see, we will go ahead. I'm really not expecting a lot of people to hop in the chat or the stream today because, like I said, we're off today. And it's Monday. It's 2 o'clock. We'll probably do a short stream. We normally do about an hour, but today I'm planning on, we'll do 30 minutes. And then if there's questions at the end, then I'll probably keep going for a little bit longer, but we'll just, real chill day today. So hope y'all are having a good Monday, and let's hop into, so the first thing, let's just look at what is the MARC, Minerals and Royalties Conference. So it is the World Oil Man's Minerals and Royalty Conference, which of course it is, right? I mean, I believe World Oil Man, they're changing their name, but for right now it's, so I actually got there at like 2:05, so I missed the Haymaker opening remarks, but got there for the global energy politics. So I drove in from Houston. That's why it was you always just got to figure out the traffic for Houston. So let's see. So normal opening remarks. So this is really geared towards the industry side of it. So the buyers and the public royalty companies. So the people who are doing this day in, day out. Not so much geared towards the private mineral owners, such as if you happen to inherit minerals, which is our normal crowd that we tend to service, but it's affecting all y'all the same. So like maybe the private mineral owner isn't having to deal with as much of buying and selling, market volatility the same, but a lot of the other issues are similar. So let's look at what the market is looking at. And then also another audio, we're getting more traffic from the industry side to our channel, and we're getting our software out there, and it's a on-demand software. So you can go there right now and look at it, pecanestimate.com. It's like a Kelly Blue Book or Zillow's estimate for minerals. And we just launched a Pecan portfolio, which I went over our last video, and every week, like Jason's pumping out. Jason is our CTO, co-founder, developer, one of two. We have 2 developers, and so like full-time on staff in America, down the street from me. They've been pumping out new releases like every day. I think that was JD's goal, was to have a release every day. So maybe that could be your little Easter egg if you want to find what's new each day, right? So, so welcome if you're on the industry side. Sorry, it's going to be a Monday for my brain also today, but I'll try to keep my summary relatively concise for y'all. I'm also going to make this a separate recording likely, since this is, I'm just generally going to try to make it where we start off with a concise topic and then roll into Q&A. That way we have the topical videos that we can put out, but also the Q&A each week. Also, I was gardening for like an hour maybe this weekend, and that was enough for all the pollinating that is happening to just my allergies. So I apologize. I have like all the medicine in me. We're gonna make this work. So, okay. So back to the agenda. So we started off with a, what was the effect of global energy policy on America, and especially like Trump's first 100 days in office, because there's been quite a bit of interesting news stories and interesting policy that's rolled out over the last 100 days. And I think at the time it was maybe 87 days, but very close to it. How has that impacted the industry? And so if you think about oil and gas industry, center of Texas, or center of the oil boom town, Texas, Houston there. If you have any political leaning, you probably could guess which direction that crowd leans. And I was very interested by the fact that there was a very neutral like tone to the conference. So I'll give the conference that up front, that it was very neutral. I didn't get too much like rah-rah either side. They did seem to stick pretty closely to like the actual effects of things. And so the main takeaways for the first 100 days in office have been that, volatility is not good for the market in terms of getting deals done. And that's it, that everyone pretty, clearly agreed that over the next at least 3 to 6 months, we're going to have a lot of volatility. We're going to have a lot of uncertainty. Prices will probably stay in the low 60s. Of course, anything can happen. So I'll probably watch this like a couple months from now and be like, well, that wasn't right. But that's everyone's current consensus, is that oil prices will probably stay in the low 60s. I have my notes here. So if I'm looking down, I'm trying to like look at the camera while I look at my notes. But yeah, so it's some of the highest volatility we've seen since 2008. So just to give you a sense of how impactful this has been to the market, there was a general feel of, we kind of did this to ourselves in terms of, was it a benefit to Trump that OPEC was doing, did the release, or was it a, hey, let's get him, let's show him, let's make him look bad type of thing to release the barrels? But generally, the OPEC cuts were the thing that's really driving prices at this point. I mean, there's definitely the uncertainty in the tariffs and that side of it too, but the pump for Trump. I tried to write down the key terms that they. I always, I read the news stories independent from a lot of the political talk or the LinkedIn talk or the Reddit talk or all the places where people put things in more colloquial terms. So it's always fun to watch what they're colloquially calling things. So like the pump for Trump, OPEC cuts. I thought that was a little clever. So. I guess not cuts, they released more oil. So yeah, by releasing more oil into the market, they're lowering prices. So Trump was trying to get the prices down to 50, that lowered prices. So, but one interesting takeaway was that generally it's seen that OPEC mostly operates with a comfortable place of $80 per barrel for a break-even price. So if oil is currently riding in that $60 bucket, then that's not a comfortable place for OPEC to be long-term. So that will be interesting to see if they are able to maintain that, or if they do get more comfortable in the 70 to 80 window, and this is a temporary measure in order to achieve certain things. I think there was only one country that was comfortable below 60, or projected to be comfortable below 60 in terms of break-even price, and I think that was UAE. But and a lot of those numbers are very speculative, because a lot of those numbers are based off of very uncertain foundation. We'll just say, like they're not as scrutinized and audited as, say, other numbers that are exported or put out there. But generally, the market thinks that OPEC needs prices to be between 70 and 80, if not higher, for them to be comfortable and for them to have break even on their budgets and markets. So that will be interesting because they do have such a big influence on the global oil price. Now, gas, on the other hand, so natural gas, not gasoline, natural gas, that was generally expected to have a good decade or two. And so that was interesting to hear. The conference was generally very bullish on gas, and specifically anywhere that had a potential for, we've mentioned this in prior live streams, that anywhere that had a potential for good connectivity to LNG export terminals and good connectivity to pipelines in order to meet the demand, and just generally a good setup to fit that global demand that's starting to arrive from natural gas becoming a globally traded thing. So the Marcellus, the Montney, and the Haynesville were the three that really stood out for both inventory and situation. And then it was also pointed out that while the Haynesville and Marcellus are very similar, so if Marcellus is the East Coast stuff and then Haynesville is the East Texas stuff, and Louisiana, the Haynesville might not have the same inventory as the Marcellus, but the political climate and the location close to the Gulf Coast terminals and the Louisiana coast terminals, that made it very interesting in terms of near-term, like a great place if you're looking to buy. And I agree with that. I've been on that bandwagon for a while now. I just see that as a place where there's a lot of remaining. There's a lot of challenges. I will say it's not like a slam dunk, but there's a lot of historical production. There's a lot of future production. There's a lot of takeaway in terms of there's a lot of pipelines. There's a lot of potential for new pipelines and new terminals and new export methods. There's a very small differential between Henry Hub pricing and local pricing for most of that area. The wells continue to there's obviously pockets that don't do as well, but the wells themselves are continuing to impress me, at least. Now I know that the impressive ones do have a big price tag on them, so that is something to maintain. But the Marcellus, which is that all the East Coast Utica, all the stuff going up in like all the way up to New York, and actually it goes past into New York, but New York's not letting the drilling happening, so just theoretically it kind of just stops there at the New York Pennsylvania border. That was the biggest opportunity for gas and the biggest opportunity based on inventory, but just has the challenges of not having the same infrastructure and having a slightly more challenging political environment locally for the states. It's also just more populated. I mean, everything is just a little more difficult when you're working in a populated area versus unpopulated. Okay. And let's see. So the Karnes County, the Karnes Trough in Eagleford, that was also generally everyone is still like rah on the Permian if you're going to buy somewhere, but and if you're going to own somewhere. So everyone's still very positive on the Permian. For oil and gas, now it's more difficult it's just an established place. So if you're not in it, it's harder to get in it. And if you are in it, trying to maximize that, that will be the game to play. Everyone's still very positive on Permian though. And Eagleford also. But just not quite to the same extent as Permian. Let's see. There's still the adage of buy where the production is. So if you're looking to get into oil and gas, look for where oil and gas is currently being produced. And that's something I've heard my whole career is also like, if the best place to find oil and gas is where oil and gas already is producing, and it sounds silly, but that's where most companies do have the most discoveries and exploration and things that would count towards, hey, this wasn't on the books before and now it is, because you're finding new horizons, you're finding ways that you can extract more from the existing reservoir. So it's much easier to push existing reservoirs further than it is to find a whole new reservoir at this point. So that adage is still holding strong. And to just generally expect soft oil markets for the next 2 years. That was roughly, the minimum would be 3 to 6 months, because that would be how long it would take for like checks to catch up, for the market to catch up to the current fluctuations in pricing. But an expectation of about 2 years of a soft market. Yeah. There was a big increase in mineral transactions year to date, so that was very interesting. So I think the last couple of years we've been writing around $3 billion of mineral transactions, and year to date we're already at 5.8 billion. That does include a lot of the bigger company transactions, but it's very interesting to see. I mean, that's what I'm seeing as well, but just from my little corner of the world here, where the people are just waking up to the fact that minerals are this thing that can provide substantial income without substantial investment, and are still kind of a sleeper investment, where if you're just looking at them purely from an investment standpoint, it's not something that's as cutthroat as maybe Bitcoin, right? So it's if you know it, there's a good chance still to make lots of money on it. So that was something that's starting to wake up to the industry. People are starting to discover that this is a thing. I mean, Mark was not at conference 15 years ago, and now it is. Like this is a new thing to the industry, but it's been around for 100 years, right? So it's new and old, which is an interesting combination. Let's see. That was a very interesting talk. So it was by Stephen Trauber, which is the head of energy and clean technology at Moelis. And I hadn't heard of some of these companies before that conference, and it was mostly because I've been in my own little bubble of the mineral owner side of it, and then entering back into the industry from there. I came from the industry side, was on the production engineering side for a public company for about 15 years, 2 different public companies, and then the last 5 years have been, forming and growing pecan tree. So if you think of minerals being around and really gaining momentum, not around, they've been around longer than that, but if they've been gaining momentum for the last 10 to 15 years, a third of that has been in my own mineral bubble here. So some of these companies I hadn't heard of, but the technology and innovation panel, I had heard of all these companies. So this was basically an ad break for a lot of the sponsor companies to come up and talk about what they're doing. And this is, my first thought was, wait, pecan tree should be up there. Then the realization clicked in that, like, oh yeah, these people paid money to be up there. That's why they're up there. So that was, of course, that makes complete sense. So Combo Curve, we actually use Combo Curve. I like Combo Curve. They're still working on certain things that the industry, they have a lot of neat tools, but the presentation of some of those tools is generally where I see them, increasing their ability to do that. They've been leaning a lot towards the carbon capture and the emission side of it to include like an all-in-one economics, but we use them for our type curves and our forecasting, and then we roll that into our engineering model. Sorry, excuse me. Allergies, man. Living in a nice place where it doesn't snow in April means that you get pollen in April. but it's so pretty. Okay. The next one, Enertel Advisors. I hadn't heard of Enertel a whole bunch, but that looked like if you're looking for like a dashboard solution for a company that had all their own data that wanted to just overlay their data and kind of integrate it that way. Trax was, let's see, they have a, let's see, I'm trying to like give them a good summary, but I'm sure that that company could give a better summary than I am, obviously. But Trax really leans on common title. So if you have a lot of common title that you're doing, making the most of that, so you're only researching the land once and then able to use that for any other landowners in that same area, and putting a more modern twist on structuring land data to make the most of it, basically. S&C Mineralware is a mineral management company where they have or mineral management software where if you're looking to do the books and manage your minerals and just keep an eye on the royalty checks that are coming in, they link into EnergyLink. There weren't a lot of mineral software company representation there, like in terms of tracking. I think that's a lot more on the mineral holder side, while this is more of the deals side for this conference. Let's see, and then Mineral Answers with Clint Barefoot. So Mineral Answers is getting into the EnergyLink competitor range, it looks like. So providing an alternative to EnergyLink, because EnergyLink is owned by Enverus, and watching Enverus kind of grow up over the years has been interesting, but now there's a very big company, and EnergyLink kind of has a small monopoly, maybe not formally, but they definitely have their corner on the market there. And it does get difficult to manage large portfolios because of how they charge for the data. But so Mineral Answers is providing an alternative to that. Plus they also have some other services. So that was, let's see, how to invest in minerals. This portion here, whoa. Honestly, this was kind of my personal opinion. All of this is just my opinion, and hopefully doesn't offend anybody. I thought this was kind of a rough end to I felt bad for the people having to present, because it was a very legal heavy presentation for the last presentation of the day. But it was generally how things are structured and how public and private companies structure themselves in order to hold and buy and sell minerals, which was kind of interesting. They did go into, on the public mineral companies, they went into a little bit of how Viper is set up, which was interesting. Because Viper is, even after watching it, and I wrote down some of it, I still don't fully understand how this is not insider trading or something like this. I'm not even going to say that, but it's just it's interesting. My brain is too small apparently to understand all of that's going on there, but it's a very interesting setup, and it's obviously above, fitting all the standards of what needs to happen. They were presenting it publicly. They're a public company. They're audited by the SEC. There's no indication of foul play or anything. I'm not saying that. I'm just saying it's interesting how Viper is set up under Diamondback, where they know all the drill schedules. So if Viper is giving an offer on minerals and it's lower than someone else, then it's that competitive advantage of okay, well, are they always going to give you the highest, or are they just giving you? Yeah, it's again interesting when one party has more information than the other. That's kind of why I'm here, though. That's why we started our company, is because most of the time one side of the table has more information than the other, and this is just it's funny that even within the industry that's happening to themselves, right? Where we're even industry to industry, there's companies that have like more information than the others, and it's causing the other companies to be like, dang it, right? But that's business. So, let's see. For private minerals, yeah, there wasn't a whole lot that I gathered from that. There was a question on, how do you check that a company is, how do you have fraud protection for investors, right? How do you check a private company like with that? And I was, real keen on that answer, but it was presented by lawyers, and they're really good at making sure it's a very like neat and tidy answer. And they're like, oh, look for reputable funds, and like, be wary of promises of future returns. I'm like, okay, yep. So, what do you know? Tried and true rules still hold. So there was a lot of this is a big networking night. So honestly, I did not partake in casino night. I know it's sacrilegious to say that, but I did not. Not a gambler, but it was an interesting conference in terms of, I'm in my own, again, I've mentioned this several times, I'm in my own little bubble here, and we've been forming our own company here in this bubble. And I say in a bubble, but it's a very structured, like intentional, like sphere, we'll say. And it's definitely not the same vibe as this conference. We'll just say my day to day. I think at least half the people there felt the exact same way, and half the people there just ate it up, right? Where this is their jam. Like there's a Rolls Royce dealership in the hotel at the Post Oak. The Post Oak is gorgeous. If you're looking for a splurge of a hotel to stay, this is not it. This is the Post Oak here. If you're looking for a splurge hotel in Houston to stay at, like, that was a nice hotel. I didn't stay at it even, but like the conference itself was very nice, and the food was amazing, even like the catered food there. And I don't know, I thought the place itself was great. But yeah, this is kind of the, let's see. And then I did say I'd only go about 30 minutes. And as expected, I'm not getting any questions. So we'll probably just, unless this isn't working and I'm just, ignoring all that. And yeah, if it's not working, y'all will just see the video later. It's fine. So let's see, the oil panel. Let's see. Yeah, so we have the natural gas panel and the oil panel, and a lot of that was very similar to the stuff that I've mentioned already, where there's a big bid-ask spread because of the volatility. Volatility kills deals. There's opportunity for investors with patient capital, which is just a good way to say if you have time to wait, this is a good time to get in. But if you don't have time to wait, you probably have too long of a wait to make it worth your money. And most of the time, by patient capital, it's that 5 to 7 year window is most likely the investment window that we're looking at right now in order to make a good return on your investment. And that I would agree with that. So the background on that would be if you're going to get your return on your investment in less than 5 years, the market is still holding on to a lot of that value. But if you're looking to make a good return on your investment, then you're probably looking on something that is currently not valued at its peak. And so you're looking at something that is slightly below that. So that's that just beyond the 5 year window. Yeah, let's see. like I said, the oil panel was very similar. I did think that, Todd, you did a great job. So Todd Berker is here in Austin. Colin Gillespie is a good reserves auditing company if you're more on the industry side needing a reserve report. So we do reserve reports, but more for the family trusts and minerals and individuals and that side of things. And we're also going more towards the pushing more as many appraisals as possible to our software. So, which I say software, but it's like an answers provided software. It's more just putting it in our portfolio and then letting the SaaS platform handle it that way. Okay, the AI overview was another advertiser panel. So another session for people to stand up and talk about their product. So Collide, that is the company that did the Energy Tech Night. So there is let's see if y'all can see it. So can I point right here? There's our thing that we won from our Energy Tech Night win. That was through the same folks that are putting on Collide, which is Digital Wildcatters. Roland AI, I've been playing around with that a lot this week, and that's an AI that is specifically trained to land data. So that's been kind of interesting. I've been playing around with that, having decent luck, but still haven't QC'd all of it quite yet. And then Enverus, they're Enverus. they're the big company now, right? They used to be tiny and now they're just massive and they act massive. So, okay, raising capital. We had raising private capital and raising public capital. A lot of this was very similar in terms of the sentiment, like what appetite do investors have for returns. The 7 to 10 year investment window for minerals and royalties, while a 5-year window for working interest in non-op, something a little shorter, is the approximate appetite right now. A lot of everything else was, I had some good takeaways from the public company panel also. Again, by this point, it was a lot of the same sentiment of we're all in the same boat. The market is waking up to the fact that minerals are a thing to invest in. It's getting a little more competitive. Competition's a good thing. It sharpens all the saws. But then on the public companies, that was interesting because it's just always kind of interesting to hear directly from the CEOs of those public companies like Viper and Sitio and Texas Land and Freehold. So that was, let's see, my notes for this one is actually in the other room, so I'll just wing it on this one. My main takeaway from the public companies was that for the next bit, they'll probably be doing more dividends or more buybacks, stock buybacks, because whenever oil and gas prices go down, minerals get hit in the same extent that the producers do, but the cost difference, they shouldn't get hit as hard because there's, I think 90% is just pure revenue from these type of companies, and so it's not the same investment that you're looking at from their side. So they're not forced to keep up with the drill schedule. They're not forced to make massive investments and keep massive projects going. It's really almost like a passive income holding. And so when oil and gas prices go down, they're associated with oil and gas companies that are making those massive investments and might struggle financially for a couple quarters, but they really don't get hit as hard as those operators do, like Chevron, Shell, the people drilling wells. And so they might take that as a time to buy back some of their stocks. So there might be some stock buybacks happening. There might be, more what's the word I'm looking for? More keeping of cash flow, like keeping that free cash flow like ready to make those good deals that come through when prices are low like this. Like if you can jump on opportunities like that, this is a good time. And so using that cash flow to finance that, most of them were offering still about a 50 to 75% dividend on the royalty, or on the free cash flow. So that's, I didn't hear any word of that going away, but these are all public companies. So this is all stuff that would be in their investor presentations and public recordings and everything that's very plainly watched. So it was more just getting them all together on the stage. It was funny hearing all of their sentiment of like, if there's one thing I can guide you on, don't do it. Don't become a public company unless you have to. But at the same time saying that there needs to be more public companies that are buying minerals because the market is there for them, but there just aren't enough companies because it's a very immature sector. And really, they do need to be their own sector in order to be classified correctly, but they're not big enough to be handled differently by the investors. So that was kind of interesting. Again, stuff I've heard, but it's nice to see it like every now and then refreshed. And then that was kind of that was the summary of it. The conference adjourned after that. Very diverse. Yeah, I'm getting phone calls and hopefully it's not anything too important. But yeah, so that is my BARC takeaway. Let me check my places to make sure I'm not getting any questions sent in from all the places that I might be getting questions. I don't think I am. I think it's just a sleepy Easter Monday. And I hope all y'all had a really good Easter. I know we did. So we had the kids do their little Easter egg hunt in the front yard and did the ham and mac and cheese thing and, church and all the good stuff. So it was a good weekend for us. It was a good conference. Glad we went. Me and Whitney were there. If y'all were there, go ahead and send us a message. Let us know you were there. That was good to meet you. Good to see you. Hopefully we said hi. I'm always not always the most social, but I do try. But all right, I think that is. I'm not seeing any. I'm gonna check one more place. All right. Yep. Not seeing any questions. So I'm gonna call it on today, and I hope you'll have a great Easter week, I guess, following. If y'all have today off, I hope y'all are having a good day off. And if you have to work today, happy Monday. So, all right, that's all I got. Thanks, and I'll talk to y'all. I'll let you know if I'm doing Friday this week or if this will be this week's, and we'll just do it again next week. So,